Okay, this is Matt Shaw, Chief Analyst, Knightsbridge Trading Academy, and this is training video 11, Trading Momentum. Now, this is somewhat a little bit more in depth than the other videos. This is something as a little bonus that I'm putting out there. It's number 11, it's my lucky number, the 1111 and everything like that. It really is something I want to put out. This is not trading advice. I must state that and clarify that immediately. For my own trading, this is a very, very simple pattern that I sometimes use as a confirmation or a blend with other ingredients to the setup. So this is not the sole purpose why I trade, but this is a good indication that there's a turn of direction and that momentum will continue in that direction. There are many other factors to consider, but this is one very good reason that I go by. Now, first of all, this is on a 15-minute chart, okay? This is a 15-minute chart, and this is all about trading the candles. Now, we generally trade bars. We use a bar chart for all the other analysis. For this, I also use bars, but I use candles as a confirmation because it's actually just clearer to see purely for this one, because I want to make sure that the bars are absolutely the same and they continue the momentum. Now, this is, again, as I said, this is all about momentum. Now, let's look at this market, for example, pound dollar. What I have noticed over the last couple of years is a very, very simple pattern. It doesn't even mean that it's a trading opportunity, but it can be sometimes an opportunity to get out. Now, what I've noticed is on a 15-minute chart, once the market gets to a certain point, say for instance to the low point or to the up point, if there are two bars or candles that are consecutive by more than 15 pips each, and they're consecutive, for instance here from the high to the low it's more than 20, then the second bar again. Now if they're more than 20, 20 combined, if they're a maximum of say 30 to 40, so between 20 and 40 points if the two bars match up from the high to the low. So we've got high 136.15 down to the low 135, sort of 70. Now that's well over 40 pips. So that there is a good indication the market has finished its sort of trend up, if you like, and generally it does come even here. If right here it had a rally all the way up from the lows of 134 all the way to 136, and this was only last week, and then we had a sell-off from 136.15 down to 135.75, so that's about 40 pips in total. So we're at a minimum of 20, and that's sort of a confirmation that temporarily the trend ended. Now, you could have gone on here and traded, not been in a lot of profit, but eventually the market did break, and there was more confirmation here that after the consolidation went on over the weekend, that on the Monday, this again attempted previous highs that was marred here back on the 15th, and then the market ended up ensuing downward below the moving averages, but it was that two consecutive candles, more than that amount. I mean, we had one or two here, but it wasn't that amount. It was only about 5 to 10 pips, these candles. Again, here, very small. We only had one candle here, even though it was a good amount. We never had that follow on. The market opened lower on the 18th, or I should say the early hours Sunday evening of the 17th, but the market then continued higher. It opened lower, but it gapped up and was blue candles. So we never had real continuation. Obviously here it was split, it was a down candle and an up candle. So overall we never had the continuation with two full candles until we got it here. Then your next confirmation was here, and the market continued lower. Again, great confirmation here, two candles, and the market continued lower, another 40-50 pips right down. So your confirmation again was there. But also what I like about this sort of confirmation is that if you're in an uptrend and you've caught the market, you've actually bought the market and you've made quite a bit of substantial profit, or you've made even a bit of profit, you've made even 10 to 15 pips, 20 pips, the pullback by the two candles is, for me, a nice exit area. So it's confirmation to say, well, we may not be selling the market here, but we'll certainly exit the market. So again, it's something we can look at. We can buy the market and actually get out here. We probably got in somewhere along here. We got up to here and we're getting out here. So in a sense, what we've done is, this is 2 videos in one, really, guys. This is good information. I'll go over this again. We've got in here, we've topped out there, but really we're getting out here as confirmation. So this gap here has been your profit. You know, you've made over 60 pips and you know that the trend has probably ended. So it's a great way to discover potential ends. Again, we've got here, again, where's the confirmation? Where's the confirmation on euro dollar? Again, just topped out, down candle, up candle, down candle, up candle, up candle, down, up. Up was very much smaller than this one, didn't even make up half of the sell on this candle, and then 2 candles lower, at least 20 pips, and then continued, popped higher on this one. Again, if you've got in here, your stop loss would be more than 8 to 9 pips away. It would be over 20, 30, especially if you're doing the 1% or 2%, sorry, 0.5% risk. Between 0.5 and 1% risk, your stop loss would be well up here. So you'd have stayed in and then continued lower. Again, 2 candles higher on the blue, you get out. End of. Pretty simple, isn't it? When you look at it like that, let's just look. I think I wouldn't recommend this for gold, but you can certainly do it for gold. Again, very much the same. You look back, there's an uptrend, 2 candles down, end of the uptrend, market continues lower. Again, this is not a complete science, and this is not 100%. I've had about 70 plus, 75, 80% success rate with this when I pick my times. Again, I'm a lot more experienced. I've traded in and out, I've day traded, I've scalped over minutes and seconds sometimes. So I'm a lot more experienced with these kinds of trades. So do not just trade these blindly. Check all your other indicators, and again, trade very small risk reward. It's imperative you stick to your risk reward. A euro yen lastly, guys, again, uptrend, 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 confirmation here, 2 candles, just about over 20 pips up, and then again you're down, lower, 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 then back up, testing those eyes. But again, you would have got out on these the 2 up bars right there. Right there. You sold it here, down, down, down. Not made a lot, 15, 20 pips, and then up, sold. Again, two bars down, over 20 pips, and then sell, sell, sell. But again, if you start to get sort of 2 bars again as it fizzles, it's not as strong. Again, we go through that on the Trading Masterclass. It's not just as simple as picking any 2 bars anywhere on the chart. I wish it was that simple, guys. If it was, I'd be a multi-billionaire. So yeah, I'm not, and it's not that simple just to pick blindly. But this is a rough guide, a rough example of how you can pick these at certain times and do quite well. But again, you can only pick them when the momentum is just about to break, and at the best times on the charts, certain time frames and certain times of the day, not before or after particular sets of data. And we go through all this on the masterclass and other training online course as well, to tell you the best times of the day for these, when momentum and especially volume is set up to take care of these and accommodate these types of trades. All the best once again. Thank you very much.